Hi everyone, I'm Jason with Level Up Investing. If you're new to this channel, welcome. In this channel, I talk about markets, talk about investments and wealth building. So in light of the COVID-19 and the stay-at-home orders and the brick and mortar stores only barely starting to reopen, we all know there's been a surge in online ordering, online purchasing and delivery. So I thought this would be a good opportunity to talk about Amazon. And specifically, what is Amazon's stock really worth today? So let me go over an intrinsic value, a review of Amazon. So first, let me go over some news items that I found. One thing here on CNBC, stocks making the biggest moves in the pre-market. This was on June 1st, and Amazon being one of them. And so one of the points that they made, and I'll put this on the screen here, it says, Morgan Stanley raised its price target for Amazon to $2,800 from $2,600, saying it expects faster forward growth for Amazon even if overall consumer spending weakens. So that really talks about not just the online ordering, but also the fact that there's been a huge increase in unemployment and decrease in wages, and some people having no wages at all and depending on stimulus and unemployment benefits. So the feeling at Morgan Stanley, at least, is that Amazon is going to be able to weather through this storm and do very well. So looking at the next one, I have what I listed here. This is from an article I found, the 10 fascinating Amazon statistics sellers need to know in 2020. So some of the key points here, that 9 out of 10 consumers price check a product on Amazon, which really should be no surprise to most of us. Let's see, Amazon sells more than 12 million products and sells over 1.1 million home improvement products. This is a key number here. 95 million people have Amazon Prime memberships in the US. I'm one of them, and I can see why 95 million people have it. It's such a great service, I think. Going down this list here, Amazon shipped over 5 billion items worldwide in 2017. The key is that that Amazon is basically, as we all know, it's the big show in town. So let me go ahead and look at the next one. This article I found talks about that 82% of U.S. households, that's a pretty significant number, 82% of U.S. households have an Amazon Prime membership. And it also talks about how the heading into the retail giant's annual sales event, Prime Day, Amazon has 139%. So that's pretty key. 139% more members this year than for its inaugural Prime Day event in 2015. So looking at the next article, I found this one to be quite interesting. This is an article on Yahoo Finance and Warren Buffett on why Amazon could be a value stock. So this was interesting. This was brought up at the Berkshire Hathaway annual shareholders meeting. Someone asked about Amazon and said, you know what, Berkshire Hathaway recently, in the last couple of years, purchased a pretty decent sized share of Amazon. And is that really a value investing type of play that Berkshire Hathaway has been known for? Someone went as far as to say, hey, you know what, I'm not sure if I'm going to continue owning Berkshire Hathaway if I don't know really why the company is purchasing companies like Amazon that may not exactly be a value investor's choice. So that was an interesting point that was made. So this was a bit of a rebuttal, I guess, from Warren Buffett, where he says, yeah, it's interesting that the term value investing came up because I can assure you that both managers and one of them bought some Amazon stock in the last quarter, which will get reported in another week or 10 days. He is a value investor. And he says here, the idea that value is somehow connected to book value or low price to earnings ratios or anything. And here's the key point. As Charlie has said, all investing is value investing. I mean, you're putting out some money now to get more later on, and you're making a calculation as to the probabilities of getting that money and when you'll get it and what interest rate will be in between. So he is saying that this is a value investment, may not be the traditional value investment that we may think of, but nonetheless, I thought that was an interesting point that he mentioned that for Amazon. So If you've seen my previous videos, you'll see I like to go over the actual data through the SEC filings. So I'm going to start with the 10K, and this is the 10K ending in December 31st, 2019. And going right into the selected consolidated financial data, looking at the net sales from 2015 all the way to 2019, you could see it there quite clearly that in 2015, for that whole year, the net sales was $107 billion, and it's continuously increased ever since. So in 2019, they reported at 280 billion, 0.5. So that's what I like to look at for net sales, is I'm seeing a trend upwards. Going down to net income, you can also see that the numbers have quite drastically increased, especially over the last couple of years. So in 2019, the net income of 11.58 billion. So that's quite impressive in the numbers. So based on that, I like to go ahead and look at the cash flow, and the operating cash flow. I could see in 2019 operating cash flow of $38.5 billion. So now let me go right into the valuation of Amazon that I've come up with. And just a quick disclaimer, again, these are my numbers, my calculation, and certainly should not be taken as advice for investing. You should definitely do your own calculations and research before you invest yourself. So in 2019, the operating cash flow from the cash flow statement, as we mentioned, was $38.514 billion in 2019 for Amazon. Looking at multiple sources online, Zacks, FinViz, Yahoo Finance, and a few other ones, I looked at what I found as the most conservative growth rate based on analysts, and over the actually for the next 5 years, years 1 to 5, the most conservative number was 24%, which may sound high, but then again, we're talking about Amazon, so it's not really a surprising number, even though it is high. I like to look at the growth rate for the following 5 years, and that is generally a much more conservative number, because as the further out you go, the more challenging it is to come up with a good forecast. But 15% is the number I have for the following 5 years, which again is definitely on the high end, but it's as you can see from the finances, it's still certainly in growth phase. So that's really no surprise as well. Looking up here, looking at the discount rate, I looked at the beta from multiple sources as well, and came up with a discount rate of 8%. So I take the operating cash flow for the most recent full year, and I take the growth rate, I plug that into the formula using an appropriate discount rate based on volatility, and then I come up with the intrinsic value, which will come up here in a second. I also take into account the current cash holdings and short-term investments that can be turned into cash. And this number is from the most recent income statement for the most recent quarter. And that came out to about $49.3 billion in cash and short-term investments. And from the same source, I found the long-term debt, most recent, is at $63.74 billion. So when I take into account the growth rate, first of all, the cash flow, the growth rate, the discount rate, I take into account the cash that the company has, and I take into account the long-term debt the company has. So, and I look at the number of shares being 498, almost 499 million shares. What I've come up with is an intrinsic value. The calculation came out to $1,500.28. So when you take the current price as of today, the current price of the stock is $2,478.40. So when you take those two together, that comes up with the current price, the current stock price selling at a 65% premium. So again, not really a surprise with Amazon, but nonetheless, it is a 65% premium. Most stocks that I'm looking at value. I'm looking at stocks at a discount as opposed to a premium. So 65% premium. And also you want to take also a look at the financial statement from the most recent quarter, Q1 of 2020. And you can see here that Amazon today reported earnings for its first fiscal quarter 2020, including revenue of $75.5 billion, net income of $2.5 billion, earnings per share of $5.01. So the key comparison here is that the net income was $3.6 billion a year ago for the quarter, and this most recent quarter was $2.5 billion. Here is the key point that I've seen, and this was from Jeff Bezos himself in the earnings report. He says for the coming quarter here, Q2, if you're a shareholder in Amazon, you may want to take a seat because we're not thinking small. Under normal circumstances in this coming Q2, we'd expect to make some $4 billion or more in operating profit. But these aren't normal circumstances. Instead, here's the key. We expect to spend the entirety of that $4 billion and perhaps a bit more on COVID-related expenses, getting products to consumers and keeping employees safe. This includes investments in personal protective equipment, enhanced cleaning of our facilities, less efficient process paths that better allow for effective social distancing, higher wages for hourly teams, and hundreds of millions to develop our own COVID-19 testing capabilities. So right there, the CEO of Amazon is telling us that in Q2 of this year, don't expect a profit. And that's quite significant, $4 billion. In fact, he says $4 billion or more is what, perhaps a bit more, he says. So this could be a loss quarter, which is quite significant for Amazon when you've seen their financials. So when you take all of this into account, let's go over what I would consider as my Amazon plan. And here it is. So based on these numbers, based on the strength of the company, this is a company that I do intend to purchase the stock, even though it's going to be at a premium most likely. But because of the way the economy is going, the fact that online sales are going to continue to increase, my Amazon plan is that I'm going to watch the Q2 numbers, which is only a couple months away from now. I'm going to watch the Q2 numbers. I'm going to expect that the earnings are going to go down, therefore the stock price will go down. In fact, I know the earnings are going to go down because he just told us that they're going to spend more than the profit that they're going to make in Q2. So we already know that. So because of that, my plan is that I will be buying Amazon because I do believe in the company and where it's headed in the future. But I am going to wait until it's closer, the price is closer to the intrinsic value, which I just showed you earlier. So tell me what you think about this. Tell me what you think about Amazon, what the future is, what you think about my intrinsic value calculation, if you think it's different. Tell me what you think. Tell me what you think about my plan. Definitely comment below. I'm interested to see what others think out there. And maybe I'll have a follow-up. Actually, I will have a follow-up video like this after the Q2 earnings come out, and we'll see where we're at. But this is my current plan. So I hope you like this content. And in these videos, I'm going to be talking about markets. I'm going to talk about investments just like this and overall wealth building strategies. So if you like the content, definitely give me a like in the video and subscribe to the channel. Hit that notification bell so you get these videos right away when they come out. So I hope to see you on the next video.